Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Friday, September 7th, 2018. We're going to start out with the ES 60-minute chart because that's what I think was the most significant one to watch today. You guys have, if you followed me for a while, you've probably heard me say time and time again, regardless of what index, if I'm trading the indexes, which I have been lately, mostly NQ, I'll always keep an eye on the two main large cap indices. That's the S&P 500 and the NASDAQ 100. And I like to keep an eye on the futures because that gives you sort of a X-ray vision, if you will. If you're even if you only trade the SPY, if you don't trade futures, you can see what's going on around the clock. So let's just rehash what happened today and where we're likely headed now. This chart goes back to this is August 30th. So this one goes back well over a week now. And at the time I had highlighted on right side of the chart this bearish rising wedge pattern, the negative divergences, and there was my scenario. You have this white line here, and that is I had since added the blue line, the level that was that same 2865 level I've been talking about for a while now as the first target for the SPY. So yesterday, you'll recall QQQ and NQ did hit and exceeded my minimum target, went down to the next target where I reversed and was looking for a bounce there. So what happened today? Let's just zoom in on the charts here. Not so much zoom in, just fast forward to today. What we have here, let me change this arrow tool to white. That's going to show a little better. Okay, so that was back then, and we broke down, back tested, and then at that point, I continued to highlight this level here is support and everything else. If you follow the recent videos, you've heard the updates there. So that's what happened. Now today in the pre-market, and I posted some updates before and after the employment numbers. They came out at 8:30, and I always say this: never take the initial knee-jerk reaction to economic data, as well as if you're trading a stock during earnings season. But as far as the broad markets go, it's more than common to see a lot of a knee-jerk reaction to any economic data, whether it's up or down. Today was down, and then I pointed out that 2865 level, and that's what we hit today to the penny. So I mentioned hitting that level. If we get a reaction, we'll probably be looking at a gap fill of the gap down. So they certainly did. They bought up the gap with vigor. You can see this big move up. And just an FYI, we hit 2865 to the penny, not 2865.01, not 2865 or 2460, 2864.99. Now, not that you get it every time, right? You know, at the line, you just drag it here and it really sets itself. It's hard to zero that in exactly, but I just wanted to point that out that that was the target level, and then we hit it to the exact penny in reverse. So there's technical analysis for you. A pretty well-defined support level on ES. And again, the takeaway from this is NQ didn't exactly hit any well-defined levels, but today it was all about ES, and that's why if I'm trading one, I'll keep an eye on both. In other words, because NQ broke down, took out yesterday's lows, that in no means was a reason to go short or to shake out of a long position, because ES was just a hair above that support level, that 2865 this morning, hit it to the button after the economic data before the bell. And if you've been trading today, as you know, it never looked back. So that's that. And now where do we go from here? That's the most important thing is let's take a look at the charts. Well, yesterday I shared this 5-minute chart of QQQ looking for a bounce scenario up to this first target zone, possibly up here. Right now, this is all I'm really looking at. I think we're going to get a pullback here. I've been, wrote up that, that rally today, looking for a pullback. And right now, I'm just sitting back and watching things and to see how the day settles out. It certainly was impressive, the gap backfill, but that again, that usually is. We were quite a bit oversold in the near term, and again, everything was priced into it. And we had bullish divergences, trendline break, and again, what you see that little red candlestick there, that was a gap down. Again, try not to read too much into knee-jerk reactions in the futures due to those pre-market earnings or economic data that come out, lest you are likely to get sucked into a false buy or sell signal. So there it is. And right now, I'll tell you, I favor pullback here today. I think that's it, at least for the near term. This 181.76 should act as support on any pullback, or it is a support level. Now, at this point in time, and I'll wait till the end of the day and I'll communicate my thoughts on the site, may put out another video. My convictions aren't very strong as to the next move, but I can say this right now. We are at a pretty uh, important critical juncture. It's where the QQQ, especially the tech index itself, XLK, is at a precarious technical level. Let's just jump into those charts. So again, I've been living in the world of the 60-minute charts. Now we look at the daily charts, or we'll start here with the 60-minute chart. Here's a trend line that I've highlighted recently, and we can go back to a 2-hour chart. Forget about everything else. Let's just try to find a clean board here. There it is. Okay, here's a little bit cleaner board. Here's a trend line that comes off the early April lows, pretty well defined, broke down, back tested. So I'm going to have to tell you I'm leaning towards the bearish side, more downside next week. Here's a breakdown and a back test on this on that trend line off the April lows, at least here on the 60-minute chart, the way I have it drawn. T1 was already hit. That was the trend line was the first target. This is T2. If we reverse, if we fail here, and I just showed you we're at resistance on the 5-minute, now we're at resistance on the 60-minute chart, and you can see we had a divergent high recently. Now let's zoom out to a little bit more significant daily time frame, and you can see the same story. This is that uptrend line I've been focused on. This is the same one we were just looking at, by the way, on the 60-minute chart. So not a surprise we're back testing that here also on the daily. So right now you have a bounce back into resistance, and that's why I'm leaning towards um, unless they can ramp this market high into the close today and park us solidly, not just right on the line, but clearly above this level. That puts the markets in a very precarious technical posture, right below a rising wedge on the daily time frame, with again big divergences. And there's the targets. I've already covered those. 178. Trading on the daily time frame. I know it might be confusing when I do these videos. I have different targets on the 60-minute time frame. That's because I wear a lot of different hats, and I know people on the site do as well. I'm an active trader, but I'm also a swing trader. And I might have, let's say, in IRAs accounts you can't trade too actively because of the free riding provisions and all that. Might swing trade, take a swing down to this level, or off these two levels on a swing trading time frame. Whereas on a 60-minute chart, looking at the levels I just showed you a second ago here, there's 4 potential price targets. This is active trader stuff where you can game these bounces, go long, short, long, short. I've been in and out of NQ probably a dozen times this week alone, and that's just active trading, off micro levels. Some of those are even too fast to post those trades, but I try to post, anything that stands out in the trading room as far as active trades go. Let's move on and look at a couple other things. SPY still comfortably above its uptrend line. Again, that's a comparable uptrend line to the one I just showed you on QQQ, generated off the early April lows there. So plenty of room on S&P 500. So, and that's reflective of the fact this is more of a little tech wreck here lately, just pressure on the big market leading FANG stocks, FAAMG, big tech companies. This is what XLK looks like, and I think this is an important chart. There's that trend line. Forget about everything else you see here. Let me show you. Well, yeah, we'll just look at this one. Some of these annotations are older. I haven't updated this chart in a while, but I still think we could get down here by the end of the year. When this trend line goes, it's a pretty significant trend line now. But this is the reason, again, that I have a little pause right here, and I'm not, saying, great buying up or great shorting up, go head first on the shorts. You can see XLK, which is by far the largest sector in the S&P 500, makes up over a quarter of the S&P 500. That's where almost all the gains have been this year, or at least I think it was, the bulk of the gains have been attributed to this sector. And those market leading FANG stocks. And you can see this XLK has actually held trendline support. And this is why you can't right now go um, all in or aggressively short. Never, of course, literally never be all in on your portfolio on any one stock or any one position, or even a broad market ETF. But just wanted to point out that XLK, as you can see, is so far defended support, bounced off it yesterday, opened down on it, hit it again today, and has rallied off there. And as I often say, support is support until unless broken. So just like I keep an eye on both QQQ and SPY to kind of give me confirm sell signals or buy signals on the market. I also, in this case, I'm tempering my desire to go in short for a swing trade, and until I see XLK break down with conviction. And of course, like I said, I've mentioned this many times. It's almost a near mirror image of QQQ, and I can draw this trend line, play around with it a little bit, but give or take, we're close enough to it. It doesn't matter if we're a hair above, hair below. We're pretty much on that trend line. You'll know when that trend line goes. That's the thing about technical analysis. Usually, when support is broken, just like it was recently on some of those market leading stocks, like I highlighted, Apple, for example, I pointed out this 60-minute chart, and there was a breakdown, and you can see once we broke down yesterday, very impulsive selling. We had a big red candle. Oh, doji there, closed under, failed to regain that level. So once that 60-minute candle printed a close below there, that was it. That was your sell signal. Other than that, it may have proved to have been a whipsaw if they regained it, but they didn't. So then you see that was followed up with a big red impulsive candle, more downside. We put in that little hammer type candlestick there, and we moved up. And I pointed out this potential bearish pennant yesterday, and I also made mention of this in the trading room. Apple broke down below in pre-market, but you cannot jump the gun on pre-market noise when it's something like it was today with the economic data, employment numbers. You have to let the dust settle. So as soon as the market opened, Apple ramped up in there, and that's why you typically it's not a good idea on any stock, any trade, to jump the gun at the open if you have something that breaks down or breaks above a chart pattern. So what happened here? Little whipsaw signals all it was. But if you take away all the annotations here on the chart, what we do have is a pretty fat, big green bullish engulfing candle. Now there were some in the bigger picture, here's the thing about technical analysis. Some people are just mechanical robot traders. They see a big bullish engulfing candle, as I just pointed out, and they go long. I look at the bigger picture. I see a bearish rising wedge. I see clear negative divergences. I see a breakdown and a pattern that hasn't even come close to playing out to the measured target. If you're not sure what I'm referring to, one of the most simple yet highly effective measurements or ways to measure, get a projected move on a rising wedge. You take the widest part of the wedge, add it to where it breaks down, and that gives you your measured target. Again, it's a rough estimate, but been doing this for years, and you'd be surprised how many times that works out pretty darn well. So there it is. Now anything's possible. Sometimes you have a breakdown, and this is one of, if not the most beloved stock in the world, and it's had a strong bid underneath it. So, I'm open to anything, but as of now, I wouldn't get too excited about that bullish engulfing candle right there, based on everything I just told you. Take it all into context, what Apple's doing, and more importantly, what QQQ is doing in the tech sector as a whole, because I can all but promise you, I don't make any promises in trading or investing, but all but promise you that if QQQ breaks down below this wedge and does play out to this target, does come down here to where I think it will, this is my minimum target in the coming, let's say, weeks to months here, 169.60 or this primary uptrend line, whichever comes first. And if that happens, I can all but promise you Apple is going to go down with it, and that is due to forced selling. Apple is by far the largest holding in the Qs, it's the largest holding in XLK, and as such, when they sell the Qs, it's forced selling pressure on Apple. The QQQ and Vesco, they have to sell what they hold as there's redemptions, and they're going to sell Apple. Is it possible that Apple rallies against the Qs falling? Sure, I've seen the Qs rise and Apple fall before, and I've seen it go the other way around, but it's unlikely. That's all I'm trying to make. It's very unlikely. So keep an eye on QQQ, keep an eye on XLK. Those are your trend lines to watch. Pretty simple stuff, honestly, right now. Here it is on XLK. Here's the thing: it's Friday. Who knows where they're going to park the indexes, but like I said, they're sitting on a very precarious level. If you're bullish, you buy support. I don't do it on a bearish rising wedge. I don't buy pullbacks to support when they're towards the apex, towards the point of a wedge where it's usually going to break down if it is, divergences and everything else. So that's why I'm looking and positioning for a breakdown, and we'll certainly add if we get it. Now that may come on a gap down on Monday morning. Who knows? Maybe if they can park the indexes on or above these trend lines, and XLK that is as well. Maybe they rallied up once more. I would put the odds at that at probably under 30%. and probably 70% or more that we're going to break down from this wedge either today by the close or into next week. But I can tell you this, it's going to keep you guessing. Whoever wants to go home during the weekend long and risk that gap down, or whoever wants to go home short, if we park it right on trendline support, realize that we could have one more thrust up within the wedge, or heck, anything's possible. We could rally on through there. Remember, divergence lines, especially this one, there's only a couple tags. It's not a well-defined trend line. This is our trend line. This is well-defined. This is support. So what I'm getting at here is divergence lines can and often are extended. We had the divergent high here, as you can see. I pointed that out on XLK. We had a correction there as well. So it's not as if the divergences didn't play out, but it was a relatively minor correction when you take the scope of those divergences. So what happened is we simply extended the divergences. They didn't go away. They weren't taken out. So that doesn't mean that they uh, were a failed indication of a correction or anything. They may be, and they will be if this happens. If we continue to come up here and we take out these previous highs in the indicators. But until then, anything's possible. Maybe we have another thrust up in the wedge. Let's show you something like this. Boom, boom. Let's see here if I can grab that line. So something like that, and then we go on and break down, and that would also put in another divergent high at this point. But again, this is what I'm leaning towards, guys. This is what a lot of things are pointing to right now, I think. And I'm doing this video, of course, why the market's up, why everything's up, because that's, to me, when you find value, it's not going to do anybody any good next week to come and tell you that everything's broken down and if we're down 3-4%, you missed the short entry. But again, I lay these levels out in advance. I can't promise you where things are going to go, but what I can do, I think a pretty good job of is identifying key support and resistance levels, chart patterns, divergences, other developments in the market. And then you just have to be ready. You have to be ready to move. And sometimes like this, it's Friday, it's a tough one. You may, if you think it's going to break down, and if you're willing to ride out a little counter trend bounce, you take a little short exposure home. If you're long and you've been able to milk a lot of this rally and you want to protect profits, well, you can set a stop there. Keep in mind your stop may be bypassed on a gap down Monday morning. Maybe, maybe not. All right, that's about it. I don't want to beat a dead horse here, but I've highlighted what I think are the important levels. Highlighted this little bounce that was expected. Now you can see since I've started the video, we've already reversed there. I started the video, we were pretty much at the that target there, the bottom of that resistance zone, those two lines in close proximity. We've reversed and we've come back down to that 181.76 level, which, as you can see here, is I'd call it minor support. And that could be it for today. And again, I'm doing this video. It's just over noon right now, so we have 4 more hours in the trading day. Watch what happens. If we close red, especially if we take out today's lows, print a big red candle, again, we're gonna have printed a solid close below there, a lot like, think back to that Apple 60-minute chart I just talked about. And I know that's a different time frame, but technical analysis, it works the same. So we go to Apple, we go to that 60-minute time frame. Here's that wedge that was pointed out on right side of the chart back then before it even broke down. You had the first candle, you had a break below, you had a break below here, you had a little break below there. You can see as I zoom in those little candlestick wicks. This one was a little bit more. See that shadow right there? Closed back above it, but then we broke down, tried to rally up but failed. We closed below trendline resistance, and then boom, that's when the selling. This is what I call the point of recognition in trading, guys. I think that's when people, those that are watching the charts and trading realize, okay, we just printed a candlestick close. This is a 60-minute chart. This pattern's on the 60-minute time frame. Therefore, all that matters are 60-minute candle closes. Likewise, on the daily chart, all that really matters are the daily closes. This stuff is not 100%, but it's pretty it's the best we have. So there it is. Right now, that candle's below the trend line. And again, if we're going to do, well, it sounds obvious, one of three things. We're either going to rally up hard and print a solid close above there. That would be pretty healthy for the bulls. So it would be a stick save. Or close right on the trend line. That keeps everybody guessing. Or a pretty decent close below. When I say decent, let's just keep it simple. Stuff, it's hard to quantify it exactly. Let's just say a close below yesterday's lows. Yesterday's low was 180.58 on QQQ. Anything below that, I think it's safe to say QQQ has broken down. And remember, XLK is just doing a little bit better with that trend line there. Let's see, there it is. And I want to make sure I have it nice and tight. Let me do this for you guys. There, tighten this up, try to capture those candles. There it is. So yeah, I would say XLK has a little bit more downside to go, and you want a higher probability for a short trade or to get out of your longs. Wait for a solid impulsive break and or solid close below that level in XLK. That should really should put the nail in the coffin for the tech stocks, at least for a near term. Talking a correction here, guys. We don't. It could certainly morph into something more. I talk about that all the time. Everything's priced into long-term charts. The fact that we could have a significant top at any time now, but for the time being, let's just focus on the near term. And if you want to know where XLK is going, if that trend line breaks, I think the first stop will be there around 68.20 or so, give or take. And then quite likely, I still think the markets, both QQQ, XLK, SPY, I think they come down at some point before the year is over to revisit and retest these lows that they had earlier in January. That'd be around 62 to 63 in XLK and QQQ. Put that line there. They're not super well defined because there was a lot of volatility going on at the time, but caught about 154.50 or so. So that those are potential targets. Things get ugly, and two ways to trade it: trade it actively, cover at those levels, or if you get that breakdown and you think this is it, and I'm telling you, there's certainly the potential there. You can set a trailing stop and allow for what I call a runner trade. Once you get a little bit profitable, set your stop at break even, ratchet it down from time to time, or give yourself a pretty wide trailing stop, and that would open the door for a potential move if we get down there about 14% on QQQ. But again, these are the near-term targets. We'll just go from there. We'll see what happens. In fact, let's just see what happens with these trend lines. But again, I gave you my opinion, my thought. I think we will break down and see more downside in the markets next week. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed the video and have a great weekend.